What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. It's your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together we're breaking down this crazy real estate market. It's the beginning of the month. So the data for July just came out. And we're going to review it for where?
For the county of Orange.
For Orange County. So did prices go up? Did they go down? Are we starting to see homes sit on the market longer? Is it more favorable for buyers? Is there going to be a market crash? We'll cover all that in this real estate update. But first things first, if you haven't already subscribed to our YouTube channel, please do so right now. It really helps us out. If you're watching this or listening to this on Spotify or on Apple Podcasts, highly recommend watching this one on YouTube just because we do put the charts there and it's easier to dissect. But with that said, Angel, let's go ahead. I'm going to go rocket rounds, review the data quickly. Me and you will discuss it, give our projections for the future, and then some advice for buyers and sellers. Cool. So let's go ahead and hop right into it. The median sales price for Orange County decreased $25,000 since last month. And in the past 12 months, it's still up about $70,000. But in April 2022, we were at $1,060,000. Right now, we're at $975,000. That's an $85,000 decrease since April, which is crazy to think about. Median price per square foot, it's also decreased from $615 last month to now $603 in July 2022. At our peak in May, we're at $631. A year ago, in July 2021, we were at $522. So it's still a significant increase, roughly $80 increase since then. How fast are homes selling in Orange County? Right now, the median days on market has increased significantly from 8 last month to now 12 days on market. So buyers, you can now take a little bit of a breather, just a slight breather. When we look at inventory month supply, how fast will homes sell if there was no more homes listed? It will take 2.3 months in Orange County. Again, a significant increase from where we were at in the beginning of the year, which was under 1 month. Now it's 2.3 months. Again, a balanced market, 5 to 6 months. A buyer's market, 6+ months. So we're still in an extreme seller's market. Don't get it twisted, but it's much easier. When we look at active listings has also shot up. We're looking at 5,184 active listings in July 2022. This is the highest that we've seen since October 2020. So that's really, really great news. You buyers now have a lot more options. When we look at how many homes sold, typically July is a very hot time of the year. School is out. The weather is better. A lot of people are making moves, but we have less home sale now, about 40% less home sales now than we had a year ago. 1,954 in July 2022. In July 2021, 3,204. And we're usually somewhere around 3,000 listings 3,000 sales in July. So we're about 1,000 sales off what we typically would see for the month of July. So, Angel, what catches your attention the most about Orange County?
Finally, right? Last month, we saw a change there. Or was it last month? I believe already. I think the last couple months, right?
Yes.
I've been seeing some softness. Some softness because Orange County was insane. Mm-hmm. Me and Anthony were amazed every month for a while.
Goodness,
like how the heck this is keeping it up.
Mm-hmm.
And yeah, so now it's kind of come back to reality, and home prices have fallen. Days on market finally in the double digits. That thing was insane. 8 days. That was staying strong up to even last month. Mm-hmm. So definitely some softness happening right now in the Orange County market for you buyers. It's a good time. Same thing we said on the LA County update. Uh-huh. It's a great window of opportunity for you buyers to get in right now. There's a lot of buyers leaving the market. There's less loan applications out there for purchases. Mm-hmm. More inventory available, right? More days on market, more opportunity, guys, right? So if you guys are really serious about buying a house, right now is the time to make that happen.
Absolutely. And I know we covered this in the Los Angeles County market update, but this is very imperative in the Orange County market update because Orange County is a whole nother ball game. Like it was really, really competitive throughout the pandemic. And this is the first month where it's just really relaxed. We saw 12 median days on market, whereas we were seeing under 10 all of 2021, most of 2022 just until now, which is crazy to think about.
Yep.
But what the two pools of buyers that really got priced out of the market because of interest rates were first-time home buyers, and then also home buyers that were looking to get a bigger home because of they necessarily didn't get priced out of the market, but they decided not to look any longer. But because they needed more space. They needed the office space because of the pandemic and everything. But now a lot of people are returning back to the office. They don't necessarily need that space anymore. And the first time home buyers decided to let's just hold off. Interest rates are too high. But now might be the time, home buyers, especially first time home buyers, that, hey, if you're still pre-approved, congratulations, because yes, interest rates are a little bit higher. But if you're still pre-approved, now's the time to start looking. It's a much easier market. You have more negotiating power. You can now ask for closing costs to get covered. You can ask for longer contingency periods. You can ask for repairs now. In Orange County, the last year and a half, you couldn't have asked for anything. You just had to take the property as is. But now, you have that power. So utilize it. It's a much better market right now, buyers. I also want to say this. If you're looking to sell your home and upgrade, this is also a very great market for you right now. You gained in the last 2 years, 3 years, about 30 to 40% equity just because it was a crazy market. You can use that as a down payment for your home now. And there's a lot less competition, as we've said already earlier. So in the tadpole of preference for sellers, where all cash offers the highest preference because there's very little that can get in the way of the deal falling apart, to at the very bottom of the tadpole, there being a seller that needs to sell their home in order to purchase, because there's a lot that could go wrong, because now you have to worry about two sets of buyers and all their contingencies and everything in between. But now that there's less offers, you at the bottom of the tadpole, as a seller that needs to sell in order to purchase, have an opportunity to get your offer accepted. You now have the opportunity to take all that equity, use it as a down payment that you gained in the last couple years, right? And then upgrade into a bigger home. When interest rates drop to pre-pandemic levels, which is what we predict once inflation cools off, which is going to be under 4%, all the flood of first-time home buyers are going to hit the market. We're likely going to see a buyer frenzy again. We're going to see home prices increase significantly because everyone's qualifying for more. There's a bigger pool of buyers. And then the neighbors across the street, homes sold for $100,000 more. The neighbors across the street, the neighbors next door sold for $100,000 more. Your home is likely going to be worth $100,000 more in return. So if you're able to take advantage in that window of opportunity right now, I'd highly recommend it.
Yeah, I think Anthony hit it right on the nail. Buyers right now is the time. I think we know we just said that, but I can't stress that enough. And what I mean by that is seeing it on the market with clients that we have ourselves. So before these clients, I would pre-approve a client, and we'll be lucky if they got an escrow within a month after getting pre-approved a couple months ago or last year, just because it was so competitive, right? Now you pre-approve a client, you can give them a week or two if they're very serious about it, and they'll most likely get an offer accepted. And you buyers who've been in the market, who were in the market maybe 6 months ago that took a break, know that how hard it was, right? So to tell you that you only have to look for 1 or 2 weeks and you can get into escrow, it's a lot better. It's a lot more enticing, and it's a lot easier, because I've seen a lot of buyers get frustrated, intimidated.
Yeah, for sure.
And it just made it for a very an unpleasant experience when buying a house. When it truly that what happened over the last year and a half, 2 years, it's an anomaly. Anomaly. There we go. Like, that never happens, right? So, you buyers out there who maybe took a break, look at the option of getting back in the market, and you may be surprised how quick you can get in a home.
Yes, absolutely. And I heard this a lot in the last year and a half to 2 years. Oh man, I wish I would have bought a home prior to the pandemic. Like, it's just too crazy now. Home prices are selling for way too much now. And those buyers that were thinking that, like, this is that time again. Like, this is that time where it's a lot easier. You're going to get relatively good deal because now you have negotiating power again. You're competing with a lot less buyers. So if you thought that in the last 2 years that, dude, this is too expensive, it's going to be too hard for me to buy a home, now is that opportunity again. And like we mentioned before, we don't know how long this window is going to happen because once the interest rates drop back down, we get that flood of buyers, the buyer frenzy starts again, home prices sell way higher. You just don't want to be in that market if you don't have to be.
Yeah.
So now's that opportunity. Angel, let's go ahead.
I'll finish with one last thing. I've said on the podcast before, and I really want to start using this a lot more, this phrase. And that phrase is, I've never had a client regret buying a house. I've just had clients regret not buying a house, right? They regretted waiting. They regretted missing their opportunity when they had the chance. And the clients who have their home, all they say is positive things about their house and how they love being homeowners, right?
Yes.
So for anyone who's scared to take that jump or think it's not the right time, just make it happen, and I promise you won't regret it.
Yeah, absolutely. And don't try to time a bottom either. It's so hard to predict bottoms for anything, for the stock market, for the real estate market especially. So don't try to, oh, okay, I think this is the bottom, I'm going to purchase now. Like, if you can qualify and you're able to purchase and you plan to stay at the home for at least 5 to 10 years, like, your home is likely going to be worth a lot more in 5 to 10 years. So if you didn't time it perfectly for the bottom, but you're able to get a pretty good deal and you're able to afford that monthly payment, and your home is going to be in an appreciating market, like, let's just pull the trigger. Like, it's really difficult to time that bottom.
Yeah.
So just really focus more so on, okay, I like this home. It's perfect for my family. It gives me the lifestyle that I'm looking for. And in 10 years, it's going to be worth more than what I purchased it for. Exactly. Right? Even if in 3 months, maybe you could have purchased it for $20,000 less, like $20,000 less. Whereas in 10 years, your home is going to be worth $700,000. We're talking about like $20,000 off of that. Like don't stress out so much about that. Right. Yeah. But let's Angel, let's pivot a little bit towards buyers. I kind of want to touch on buyers for a little bit. So we're seeing the median days on market increase, right, to 12 days. We're seeing median sales price drop, right? It's dropped from $1,060,000 in May 2020 or in April 2022 to now 975,000. So buyers, sellers, you now have to understand that the negotiating window that you once had, or the negotiation that you once were able to get away with, is no longer there, right? Buyers' preferences have expanded. The buyer standard has expanded. Buyers are now expecting closing costs to be covered, or a portion of it to be covered. Some repairs, maybe even negotiate the price down. And sellers, if you're really serious about selling your home in this market, you have to be willing to negotiate. It's still a seller's market. You're likely still going to receive multiple offers if it's marketed properly. We're talking 3 to 4 offers if it's marketed properly. But it isn't that market where you're getting 10 plus offers. Exactly. And you're just able to, hey, if I don't get if you don't accept my terms, I'm just going to go with the second person because they're going to accept my terms no matter what. Like, that's not going to happen any longer. You have to understand the market has shifted. Yep. It's a different market. You have to be willing to adjust to it, because if you don't adjust and accommodate, if prices continue to drop, you're just losing money every single month.
Yep. That's true.
So you have to be willing to, okay, you know what? I'm willing to negotiate. I'm willing to cover your closing costs so that, we can get this home sold, especially if it's something that's urgent, right? So don't get greedy, because the market was something that we've never seen for a year and a half, and you want that type of offer again. It's that probably is not going to happen for another 6-7 months until we see a buyer frenzy again. But can you wait that long? And is it guaranteed that that's going to happen? We don't know. So exactly. That's just a word for you sellers right now.
Yeah, and just to attest to what Anthony's saying, how the market's changing and how credit is being applied. I have 2 escrows right now where sellers are crediting buyers thousands of dollars, not like 1,000 or 2,000. I have one I think that's 5K and one that's like 7, 8K and closing costs that they're crediting them. So it's just a changing market, and I agree with Anthony. And it happened quickly, right?
It happened real quick.
It happened very fast. 2 months ago was a totally different market. 3 months ago was insane how crazy the market was. So buyers, yes, you're gonna have to adjust. Excuse me, sellers, you are going to have to adjust to these market changes, and again, be willing to be willing to negotiate, because buyers don't have to take that anymore, and there's other options out there if needed.
Yeah, and you can get very creative, sellers, in order to net you the same amount of money. For instance, I just sold a home last week in Norwalk, and our listed price was $750,000, and we really wanted to get it sold, but it was difficult for us to get the $750,000 price point. But we were able to get creative with a set of buyers and be like, you know what, like we really want the 750, and I know that you really want money to fix the home up because it was a little bit outdated. Let's do this. We'll cover your closing costs and let's increase the price to $15,000 over, so that we increase the price to $765,000. They walk away with $15,000 in closing costs, right? So that now they have that money to do the repairs and everything they need, and my sellers still walk away with $750,000 net. And because home prices were selling for so much months ago, like the comparables are there. You can cover a good chunk of the closing costs and it will likely appraise, especially because the market is somewhat going down in value every single month. So that might be the best tactic for you to net the most amount of money. And then also for a buyer who, money is precious. If you're able to get that closing cost covered and save yourself out-of-pocket expense, like it's a win-win across the board. So be very, very creative with those offers, buyers and sellers, to make this a win-win across for both of you, because the comparables are there. Homes are going to appraise for what you're looking for. Like I can tell you that a lot of agents are calling me as a realtor, are calling my team and be like, hey, do you have a buyer? This property appraised for $925,000, but we're willing to accept $910,000. So properties are appraising. Like that's not a problem anymore. You now have the opportunity to give out closing costs and get the net that you're looking for. So be creative.
Yeah. And I think Anthony hit it on the nail with saying, pretty much what he's trying to put together is just a team effort now, right? Before, the seller was the person in charge, and if they don't want to put up with the buyer, they had 10 other buyers ready. Now you have to be willing, both work to figure out a middle ground, right? To make it work for both you, the buyer, and you, the seller, right? And that goes back to their agents too. Their agents being on the same page of everybody has their end goal, right? Which is one person wants to sell their house for top dollar, the other person wants to get in through the new house. And as long as everyone's on board of trying to make it happen, it's definitely possible. And it honestly makes the process a lot smoother when everybody has a team effort oriented.
Yes. Yes, Angel. So let's give our projection real quick.
Yeah.
So I don't think any one of us projected a $25,000 decrease since last month, but
definitely
$975,000 is the median sales price as of July 2022. What do you think it's going to be in August 2022?
I mean, I don't think it'll go I can't see another 25K. I think that's just a big drop. I'm gonna say I think another 970, maybe another 5K drop.
5K drop.
I don't think there's gonna be too big of a 5 to 10K, but I'm leaning more towards 5K drop.
So in July 2021, we saw a $905,000 median sales price. So I think that we'll still be, so like in August 2021, 900,000. So I think that we'll still be above 900,000. We're still gonna have year-over-year appreciation, but is it going to be a small drop? I think it's gonna be a bigger drop than that, Angel. I think we're gonna be closer to 960. So a $15,000 decrease in median sales price. That's where I think we're gonna be at. Just because 15K to 960, and you're saying 970, right?
965 to 970.
965 to 970. All right, then I'm gonna go 955 to 960,
All right, that's
bro.
fine.
'Cause
I said 5 to 10, but I'm leaning more toward 5.
I want a little wiggle room too.
Right.
But yeah, that's our projections. We'll see. We just like doing this to see who's right. But usually we're both kind of off. Like we're off like by 5 to 10,000 most of the time. But with that said, homies, I hope this gives you a good idea of this Orange County real estate market. This is a market where everybody can win if you play your cards correctly, right? And this is a market where if you've been waiting on the sidelines because you thought that the real estate market was just too hot, you got priced out, it's just you don't want to be in that market where you're going to be looking every single weekend. It's no longer that market. Like, take advantage of it. If you get pre-approved, just know that that interest rate that you have is temporary. Like, it's tentative. Date the rate, marry the home, refinance in 2-3 years when interest rates are better. It could be better in a year, right? Refinance as soon as interest rates get better, and then your payment will drop significantly, and you're going to be in the home that you want.
Exactly.
Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. You know where to find us at the Luevanos Group. If you haven't already, subscribe to our YouTube channel. Peace out, homies. Have a great day.
Thank you. Hey, homies. It's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.